We detected an unusual trade worth $59 million on FTAI Aviation stock, ticker symbol FTAI. This company owns and leases aircraft and jet engines, playing a critical role in the global aviation and transportation sector. But is this massive trade a signal that smart money is expecting FTAI Aviation to take off soon? And here's what makes this even more interesting. The company is scheduled to report earnings in a few weeks on July 29th. And so in this video, we'll break down this unusual option activity to figure out whether this wealthy investor is going bullish and buying, expecting the stock to fly higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, including potential access to earnings data before it's public, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trades happened on July 9th at 2:38 p.m. at the 21-second mark for these August 15 options at the 120 strike calls, 95 strike puts, and the 135 strike calls. While there were multiple trades for these same options, the largest was a quantity of 6,250 contracts. And based on our deep research and analysis of other data sets, this wealthy investor sold these 95 strike put options. And by selling those puts as part of a cash secured option strategy, this investor is willing to own 100 shares of the stock at the $95 strike price. That means each put options contract sold required $9,500 of buying power. So to estimate the cost of this trade, we multiply this buying power by the total number of contracts sold, 6,250, which equals an estimated trade value of approximately $59 million. But keep in mind, the earnings report is being released in a few weeks, so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, you might be wondering, is this option strategy a long bullish trade or a short bearish trade? But first, we need to confirm that this wealthy investor is actually opening a new trade and not simply closing a previous trade. Because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock, so maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening new contracts, it could signal an opportunity for us to start a new trade. And so let's check the current data on the option chain for these August 15 options at the 95 strike puts. We can see 11,000 open contracts in the open interest. And for the 120 strike calls, we can see 12,000 open contracts. And for the 135 strike calls, we can see 9,000 open contracts in the open interest. And so if this wealthy investor opened new trades, then the open interest should have been lower before this unusual trade was made. So let's check the historical data from July 8th, the day before this unusual option activity happened on July 9th. And so looking at the August 15 options, at the 95 strike puts, the open interest was only 85 open contracts, and at the 120 strike calls, 1,068 open contracts, and at the 135 strike calls, only 344 open contracts in the open interest. So all three of these options had a much lower number of contracts open prior to this unusual trade. That tells us this wealthy investor was opening new contracts because it would not be possible to close out 6,000 contracts if fewer existed on July 8th, the day before. We always take this extra step to verify the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. And in this case, our deeper analysis confirmed it. This was a new trade opened by this wealthy investor, not a closing trade. So now, with that confirmation, let's set up their option strategy on the option chain to see which sentiment and stock direction this wealthy investor is betting on. And so for these August 15 options, this wealthy investor sold these 95 strike put options, collecting premium to buy these 120 strike calls, and sold these 135 strike calls to collect additional premium, setting up a more sophisticated option strategy, which we can analyze here using the risk profile graph, where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, loss. And as the share price goes up, this trade becomes more positive, more profitable. That's because this wealthy investor is going long bullish on FTAI Aviation stock with this option strategy. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. Now, keep in mind, even though this trade is higher risk, we still took it, but we used position sizing and a slightly different strategy to manage our risk. And so, as you can see here on the option chain, for the August 15 options, at the 120 strike calls and the 135 strike calls, we got into the same position here, marked as POS, which stands for our position, and the green color indicates a buy position, while the red color indicates a sell position. And notice at the 95 strike puts, we do not have a position here. We did not sell the put options because it requires a lot more capital per contract, making it more difficult to manage risk by position sizing. And so we bought the 120 strike calls and sold the 135 strike calls, setting up a vertical call spread for 338 each. Keep in mind that this shows options prices, and since each options contract controls 100 shares of stock, to get the dollar value of one contract, we either multiply by 100 or simply move the decimal 2 places to the right. That means each trade here costs a debit of $338 per contract, which is a lot less than the $9,500 needed if we sold the put options. And so when we analyze our trade, you can see here on the risk profile graph, as the share price goes up, our trade becomes more positive, more profitable. That's because this is also a long bullish trade. We can also confirm that by checking the options Greeks. This trade also has a positive delta. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $120, the stock needs to trade above $123 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to boost your profits. Let us know in the comments. Do you think FTAI Aviation stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.